Good evening, everyone. I'm Christine Vokey, Director of Education and Information for PXE International, and you've joined the PXE International webinar entitled Insurance Issues for PXEers. Our speaker tonight is Pat Manson. Pat is a PXEer and a lawyer. He writes a column for our website and for our membergram called PXE Vision by and for PXEers. Pat's career has taken him from teaching English at Florida State University to working as an editor in the publishing industry in the Department of Defense. After earning his JD from the University of Virginia, Pat started his career as an attorney at a large law firm in New Orleans. He then moved in-house and worked directly for several corporations in the pharmaceutical, medical device, and coal industries. Later, he was Vice President, General Counsel, and Corporate Secretary of Hamilton Beach Proctor Silex, the kitchen appliance company, and Albemarle Corporation, a large chemical company. In 2001 and 2002, Pat lost his central vision, and he's now legally blind and on disability. In his column and his workshops for PXE International, Pat combines his experience as a corporate lawyer with those of a PXEer to provide advice and help to the PXE community. With that, I'd like to welcome Pat Manson and begin the webinar.
Thank you, Chris. What I'd like to talk about in this webinar is long-term disability coverage under U.S. law. Well, as Americans, of course, we shorten everything, so long-term disability, or LTD, used to be called long-term disability income, because income is what LTD is all about. Today I'll be explaining about 3 different ways to obtain LTD income. This, in fact, is a live version of an article I wrote for the membergram and also for the website called Are You Disabled? So if you have questions about my presentation, you may find the answers there. In my talk, I'm going to be focusing on vision loss. As PXEers, we know that there are numerous manifestations of our disorder, but the most common disabling manifestation of PXE is vision loss. As you also know, all PXEers fall into one of 3 categories. 1, those who have sustained enough vision loss to be deemed legally blind. Those who have sustained vision loss but who aren't legally blind. And those who sustained no vision loss but live in fear of eventually falling into categories 1 and 2. Because if you are in category 1 or 2, a PXEer may no longer be able to do the functions of his or her job or of any job, and therefore no longer be able to make routine income. And let me tell you a story as an example. I know a 40-something PXEer, a husband, a father, and a former highly successful sales representative. He was so successful at his large service employer that he'd won numerous awards, and in fact was the most highly rated sales representative for this company in the world. When he began to sustain his vision loss, he very maturely went to his employer, and his employer very forthrightly began a series of accommodations for him in order that he be able to continue working. His sales territory was altered so that he could contact and actually visit his clients by either mass transit in the city in which he lived and the environs, or farther away where he could fly and catch a cab. In other words, those clients to whom he normally would drive were given to someone else. Despite that very reasonable accommodation, his performance eventually began to slip when his vision deteriorated further, and in time both he and his employer realized that he could no longer perform the functions of his job. At that time, he and the employer sat down and worked out a mutually satisfactory exit strategy, and upon the completion of that, he found himself unemployed and without income. So, like so many other PXEers before him, his goal switched from employment to replacement income. there are three potential sources of replacement income. One is the U.S. Social Security Administration, or SSA. Two, group long-term disability insurance. Three, private long-term disability insurance. Interestingly, you may qualify for benefits for any one, any two, or even all three of these different sources of LTD. Well, how are they different? And why would a PXEer want more than one source of income? Well, the second question is easily answered. You want more than one source of income because the more the merrier. Each one would provide income. Each one would stack atop the other and bring you closer to your original income. How are they different? They're different in a critical way, and that is that each of them has a differing definition of disability. Well, the first source is SSA, the Social Security Administration, and its important SSDI, or Social Security Disability Income. You can read all about that at the SSA's website, which is called www.ssa.gov. It's an excellent website. I'm not a big fan, typically, of institutional websites, but this one's very good. It's easy to follow, it's comprehensive, and it's very informative. Well, eligibility for SSDI accrues to the American citizens as a matter of right. There's no what we call underwriting. Many of you before have applied for insurance, whether it's life insurance or disability insurance, and you've had to provide certain information in order that the insurer can gauge its risk before it agrees to insure you. Do you smoke? What's your weight like? What's your family medical history? Those kinds of things. None of that applies for SSDI. If you are breathing and you are employed and you stop being employed as a result of what SSA regards to be disability, you will be eligible for SSDI. Well, SSDI is important not only because of the amount of benefit it provides, because it's not large. It's also important because of the interplay between SSDI and the other LTD coverages. Often, LTD insurers are guided by SSA's determination of disability, and they defer to SSA's determination. Well, SSDI has an any occupation, or as we say, any OC standard, meaning not whether or not you can do your job, but whether or not you can perform the functions of any job. That's a, excuse me, that's a broad standard and not an easy standard to match. Well, you apply for SSDI, you can do it either by telephone or online, and frankly, it's quite easy. You simply log in or call in. You provide your name, your Social Security number, and some very general information about what your disability is, and then what happens next is a fact-finding event is scheduled. Either it's a telephone conference supplemented by information you have to mail in, or a face-to-face meeting is scheduled at the local Social Security office. I strongly recommend that you do the latter. When I was in private practice, I always recommended to my clients that they, whenever the opportunity afforded itself, always have a face-to-face meeting. Become a face, not a name, not a number. It's a lot harder to say no to someone whom you see in your mind's eye than would otherwise be the case. In my particular instance, I scheduled a fact-finding event. I went to my local office. My wife drove me and dropped me off. And when I went back in the back to meet with the examiner, she could readily see that I was struggling somewhat. I had my handheld magnifier with me. I couldn't read the document she gave me very well. And she was clearly leaning towards approving my SSDI application right then. But I capped the event by, when she pointed me back to the lobby, I got the wrong door and I went into a cleaning closet. So I think that sort of sealed the deal. So I recommend strongly that you go to You go to the fact-finding event personally. Now, I'm happy to report that legal blindness is what's called listed. Listed meaning that within SSA's regs, if you approve that you're legally blind, you should, per se, be approved for SSDI. Nevertheless, when you're filing your application, you should take a broader, more kitchen sink approach. If you have other issues, if you're depressed as a result of your vision loss, if you have headaches when you try to read, if you have any other medical reasons that returning to work or continuing work would hamper those chances, then you ought to throw in those with your application, and that will increase your chances of being approved. Now, even though SSDI is a matter of right, or at least the eligibility for it, there's a huge backlog in the review of SSDI applications. SSA has done a good job of late of clearing that backlog up, but it still exists. More importantly, there's a very high, 85% plus, initial denial rate. A few years ago, I took some classes at my state's Department of the Blind and Vision Impaired. And while I was there, I got to know a number of other folks like me who had low vision, but most of them had vision substantially worse than me. They weren't blind, but they were way beyond me. A number of them, already had canes, and yet they had been denied for SSDI. Why? Because they tried to handle it by phone, and two, they hadn't done an effective job at convincing the examiner of their situation. It's like any insurance claim, whether it's a fender bender or a leaky hot water heater at your house. You've got to have your paperwork straight. You need to have some papers from your doctor, confirming that you're legally blind. Carry the day, and you'll get this approved. And these folks had not done that. Nevertheless, it's clear that SSA leans towards denials at the first level. Here's how the procedure works. Like I said, you file your application, you do your fact-finding, and once you're deemed disabled and you have 5 months of continuous disability, the benefit payments start. As a result of this backlog, often there's a single catch-up payment at the beginning of payments and then monthly payments thereafter. There's an annual cost of living adjustment. You receive a letter from SSA typically in December saying what the payment's going to be for the following year. And that's not a huge adjustment, but it does keep up somewhat with inflation. Now, the amount of payments you receive as a result of your SSDI benefit are frankly small. They weren't meant to be sustaining, and they're not. And the payments are calculated based on how much you put in as part of your payroll taxes in the first place. The maximum is $27,000 about, and the average is about $13,000. If over the course of your working career you worked part-time for a while, or you were out of the workplace, if you were between jobs or you were out on maternity leave, that's obviously going to affect how much you paid in. And as a result, that will affect how much your benefit is. And note, too, that your SSDI benefits are potentially taxable depending on how much your other income is or how much your spouse's income is. SSDI also provides a smaller benefit for dependent children under 19, and it provides some retraining program. So that's SSDI, the first of the 3 sources of income replacement. The second is group LTD, or group LTD insurance. Now, what does group mean? Well, typically, group means your employer. Your employer has contracted with an insurance company, joining a group of other employers who have joined this group, therefore spreading the costs and the risks, and therefore bringing down the cost to the insurance and the premium either to the employer or to you. But there are other groups besides employers who may be that you may be able to join. A union, a trade association, a professional society, or a voluntary group. A number of these afford groups or provide groups that you can join and obtain group LTD through. For group LTD, there is some underwriting. It isn't automatic that you'll be a part of that group. They may ask you questions and exclude you from the group because you're regarded to be too high a risk. Well, I have to tell you now about Ramesh Ravi. He always insists that I give his name. Ramesh is a Verizon IT employee in New Jersey, and he's in his 30s, married, young children, and he's a PXEer. No vision loss yet, none to speak of, but he wanted to make sure that he was adequately insured in the event that did happen. So he applied for his group LTD through his employer and was denied. He answered the questions truthfully. That's absolutely a no-brainer. You always have to do that. He answered the questions truthfully, and when the underwriting department saw that there was a possibility that there'd be some vision problems because he put down PXE, they simply denied his coverage. So he was stuck at a point where he was making a nice income, but the only backup to that he had was SSDI. Well, fortunately, in pretty short order, his employer changed LTD insurers, and that new company was very interested in increasing the number of participants right away, and their underwriting, frankly, was fairly liberal. He wasn't asked much. He answered everything truthfully. He was approved, and now he's adequately insured between his SSDI and his LTD. So that's a real success story as a result of some diligence on his part. Now, the benefits provided by a group LTD policy don't usually cover the entire income you make. In fact, they usually cover about 60 to 70% of your final compensation, sometimes as low as 50%. And in fact, usually there's no COLA, cost of living adjustment, once the benefits begin. So let's just say that you go out on LTD, you're approved, the benefits begin. Well, you are then living on a fixed income. That amount stays level for the rest of the term, and yet inflation will be eating into that benefit as time goes on. Well, let's use some real numbers here. Let's say that your salary is $50,000. Well, if your benefit only allows 70%, that reduces that 50 to 35. If it's 60%, that 50 becomes 30. The benefits are often capped also. For instance, my last employer, we were entitled under the group policy to 60% of our final comp, capped at $60,000. So a highly compensated employee, no matter how much he was disabled, the max he was ever going to get was $60,000. Most group LTD policies also require an SSDI offset, meaning that from the amount you receive on your group disability, SSDI is deducted. So the total of the two would equal what you would otherwise be getting under the group disability plan. Again, using our numbers. Like I said, my last employer, the cap was $60,000. So let's say you were going to get $60,000. And I said that the maximum SSDI was $27,000. That would mean, if there were an SSDI offset, that the insurance company would now only be paying 33. 33 plus the 27 max under SSDI equals the 60. Obviously, insurers love that because it gets to reduce the benefits they pay. Group disability plans also typically end at 65, the assumption there being that you'll be beginning to draw on your pension at that point. Now understand that a group LTD plan, it's a contract. So the terms of your insurance are based on the terms of the policy. Nevertheless, typically group LTD policies have a two-step approach, a two-step definition of disability. For the first 2 years, there's an own occupation standard. And that is the most protective, the most narrow definition of disability, providing you the best protection. You apply for LTD, you go out, your employer is asked, can she no longer perform the functions of his job? Employer confirms it, you get your full benefit for 2 years. But that changes after 2 years. After 2 years, the own occupation standard shifts to an any occupation standard, which is obviously a much broader definition, and the question becomes not whether or not you can do your job any longer, but whether or not you can do any job. And the assumption there being that during those 2 years you will either have improved or you will have retooled yourself for some alternate occupation. Nevertheless, the gap here between own OCC and any OCC is so broad that many regard a group LTD plan to really be a 2-year benefit. Well, most group LTD insurers require the SSDI application. And not only is there an SSDI offset in many instances, but often the LTD insurers look to SSA for their determination on disability. And I'll explain this by way of a story. I have a friend I've written about before who was a VP of marketing for a large consumer products company. Well, she had a very responsible job, lots and lots of hours, lots of travel, high stress. She also had MS. And the way that her MS affected her was when she got very tired or very stressed, she literally lost her ability to speak and sometimes experienced paralysis. Obviously, she was at high risk. She ultimately took LTD. Under her group LTD program for the first 2 years, no one disputed that she couldn't do that job. But at the end of the 2 years, as she was required to do, she applied for SSDI. Well, the Social Security Administration denied her. Why? They said, gosh, she looks great. She hasn't lost any weight. She can talk. She can walk. Gosh, she even cuts the grass. She's not disabled. Well, she appealed that and was able to carry the day. Oh, let me back up a second. I forgot to say something. When SSDI was denied her, her group disability plan dropped her, saying, gosh, we've now switched to the any occupation standard. If she's not good enough for SSA, she's not good enough for us, she's not disabled. So she appealed the Social Security's decision, had her doctor there to explain that, well, the truth is she really can't work because once she gets tired, once she gets stressed, which would go with any job, she literally can't move or talk. That was pretty hard to sustain the argument that she could still work. So she ultimately was determined that she was entitled to Social Security disability income. And her long-term disability plan did kick back in, and she's been living ever since on the combination of those two. If an employer pays your group LTD premium, and they don't always, it's often done by way of deduction, but sometimes you pay it by way of deduction from your income. But if your employer pays your group LTD premium, then the benefits are taxable. Now I'm going to go slowly through these numbers on this slide because this is a pretty hairy slide, but this is a very good illustration of how these numbers work. Remember how I had said before how that 50 can become 35 if you're at the 70% payment level. Well, again, if those benefits are taxable at the 30% or 70% net, that 50 becomes 35, which then becomes 24.5. If you're at the 40% taxation level or 60% net, that 50 becomes 35, which becomes 21. Obviously, 50 to 21 is a substantial loss, but it can get worse. What if your 50 becomes 30? It then can become 21 or even 18. If your group LTD allows additive benefits or stacking, that's going to be helpful to you. That means that there's not an offset, but you can make money from SSDI and money from your group LTD. The best case scenario is that the 50 would become 37.5. Where'd that number come? Well, looking up above, the 24.5, which is the best case scenario for under the 35, and I'm adding in the 13, which is the average of the of SSDI benefits. So that's 37 plus 13. I'm sorry, 24.5 plus 13 becomes 37.5. The worst case scenario is your 50 would become just 31,
which is the $18,000 from above, as well as the $13,000, which is the average SSDI benefit. Now, if your group LTD requires offset, then you just disregard adding the two numbers together, and it can become, again, looking right up the slide there, somewhere between 24.5 and the 18 would be your total of the two. If SSDI plus your group LTD leaves you exposed, there's two approaches you can take. One, you can try to get into another group and pay the benefit yourself. For example, you receive group LTD through your employer, but perhaps you can, through a trade association, through a union, through some other voluntary group, you can apply for it and receive additional group LTD benefit. Another option related to this is that you can pay the LTD premium yourself. Obviously, if it's a non-employer group, you'd be doing that anyway. But sometimes employers deduct the premiums, even though you're paying them. Now, what you can do is some employers will allow you to pay that with after-tax dollars. And if that's done, then the benefit you receive from your group LTD won't be taxed. Let me repeat that. Your group LTD premium, if your employer pays it, it's taxable. But if you pay it, it's not. And if your employer deducts it with after-tax dollars, then it's deemed that you paid for it, and therefore the benefit, if and when you receive it, won't be taxed. So that is one way to shore up your group LTD potential. The second thing you can do if you feel yourself exposed is you can obtain private LTD insurance. And that's the next topic I'd like to cover. That's the third source of income, and that is private LTD insurance. Private disability insurance is unquestionably the strongest protection available, but it's also the most expensive. Now, by private, what I mean by that is that this is insurance obtained and purchased by you independently, not as a result of you being a member of any sort of group. Now, why do I say that it provides the best protection? Well, it uses an own occupation standard, and there isn't any two-step program like you have in your typical group disability program. It's own occupation for as long as you're working. Because you paid the premiums, it's not taxable. And lastly, there's usually COLA, cost of living adjustment, which makes it more or less indexed according to inflation. Now, nevertheless, your private LTD protection typically ends at 65. Now, I will say, as I've said before and written about, that I had and live on now private LTD policy. When I was in my 30s, just like Ramesh, I was in my 30s. I was a new lawyer, the father of 2 young children, the primary breadwinner. I felt myself pretty exposed to the possibility of losing a chunk of my vision, and so I obtained private LTD insurance. It was very expensive, and it was a substantial sacrifice. My wife and I had to postpone saving for college for quite a long time. But nevertheless, fast forward 20-some years, it's been a financial lifesaver for us. Who should consider obtaining private LTD insurance? Well, anyone for whom group LTD isn't available. Your employer doesn't provide it, or you're self-employed. And in that instance, you're going to be relying solely on SSDI. A second group of individuals who should consider obtaining private LTD are those for whom the cap on their group LTD is a major impediment. Let's say that you make $100,000, and the cap would be $60,000. I'm sorry, the 60% would be $60,000, but the cap is $50,000. So you're underinsured by $10,000, and you may want to obtain a small amount of private. You may want to obtain a small amount of private disability insurance to make up that gap. Well, where can you go to find private disability insurance? Well, the same insurers that provide employers with group LTD, like Provident, Unum, MetLife, and that sort of insurance companies, those companies usually write private disability insurance policies as well. There's also a group of...
I'm going to interrupt here, Pat, and ask that everyone who's on the line mute your phone with *6 so that we don't have background noise for the whole group. And then during questions, you can unmute again with *6, and I'll tell you when questions are coming. Okay, Pat?
Thanks. There are also some higher-end insurance companies that typically don't provide group LTD, that do provide private LTD policies, and these include, but by no means is this an exhaustive list, but they include Northwestern Mutual, Paul Revere, John Hancock, and The Hartford. Now, a story. The Minnesota sales rep I was telling you about earlier, well, even though he wasn't legally blind, he ultimately was approved for SSDI and his group LTD, but his policy required the SSDI offset. So, in other words, the 60% that his group LTD policy provided was all he was going to get, totaling the SSDI and the group LTD. As a result of the offset, the 60% was all he was going to get, except for one thing. He had sensed that he was at risk, and so he had purchased on his own a private LTD policy. So now he is able to live and maintain his family on the combination of the three, SSDI, group LTD, and his private LTD. Now, remember I explained how SSDI has no underwriting, and that group LTD typically has some underwriting. Well, private LTD, frankly, has major underwriting. They'll require a physical, because these companies, while they collect high premiums, they also pay high benefits, and they want to understand. They want to fully understand the risk that they're taking on. And because they're a private insurance company, they don't have to take you. I will tell you that when I applied for private disability when I was in my 30s, I was denied. It ended up, of course, my application ended up on some underwriter's desk who looked up pseudoxanthoma elasticum and in some medical dictionary and saw that there was a possibility that I would become legally blind and simply denied it. Well, I appealed that using the information available at the time that not everyone who had PXE becomes legally blind. In fact, a healthy percentage of people don't. Fortunately, I was able to carry the day, and I was approved for private LTD, and that has been, as I said before, a financial lifesaver for my family and me. The bottom line on all of this, on these three things, SSDI, group LTD, and private LTD, is that, in my opinion, it's critical that every PXEer gets some LTD beyond SSDI, because SSDI likely won't sustain you. I think that just like the old expression, chicken in every pot, car in every garage, I think every PXEer ought to have some LTD beyond SSDI. It's unquestionably true that the anti-VEGF drugs are rewriting the world for us, and they're wonderful things. But at this stage, it's not at all clear that they're going to last, that they will be able to hold everyone's vision where it currently is for the rest of their life. They may peter out. They may eventually have a side effect profile that you won't be able to take them for 20 or 30 years. And even if that weren't the case, they haven't proven wholly successful for every single person. And if the gap between hoping that anti-VEGF drugs carry the day and then having to live on SSDI, it's a pretty big risk. And my recommendation would be to look into some LTD beyond SSDI. If your employer provides it, sign up. And if you can, pay for it with after-tax dollars. Because as I said before, if you do that, the benefit won't be taxable. If your employer doesn't provide group LTD, consider changing your employers. No one would hesitate doing it, changing employers for more income. Well, you ought to consider benefits to be just as important as your income. Or get another group LTD policy, union, trade association, et cetera, or get private LTD. And when should you do all this? Sooner than later. Don't wait until you've had a bleed or 2 bleeds and then begin trying to figure out what you ought to do, because you may be too late then. You know, underwriting may decide that you're just too high a risk at that stage. It's a whole lot easier to get LTD insurance when you seem to be a much lower risk than when you're a greater risk. That's it, folks. Thank you for your time. And Chris, I'm open for questions.
Okay, anybody have any questions? We'll try to take one at a time. You can unmute your phone with *6 and speak up. Are there any questions?
Pat?
Yes?
Hey, it's Alan Limley. How you doing?
Long time no talk to.
Yeah.
How are you?
I've had a pretty good bit of success. I mean, I've gotten all my stuff approved. I do have one question I'm a little concerned about, and that's the any occupation standard.
Yep.
Which I'm pretty sure that's the way my group policy is. I think that's pretty standard nowadays.
Yep.
How? I know it's a broad standard, but you know, does that include? I mean, if they determine that I had enough vision to go build boxes or something for a nickel a box or something, is that considered an occupation? How broad is it?
Well, let's back up a second. You said you were approved for everything. Were you approved for SSDI?
Yeah.
Okay.
That finally came through.
And secondly, are you legally blind?
Yes. And continuing to get worse. So you know.
I understand.
Yeah.
Well, you know, if you weren't legally blind, that would be an issue. But remember, legally blind is a listing. I mean, literally within the regs of SSA's regs.
Okay. So do most employers and group policies, when they're doing any occupation, also follow that listing?
Yes.
Okay. Okay.
Now, now, might they try something? They might.
Right.
But you ought to be able to carry the day.
Well,
because you're legally blind, and you know, generally speaking, the group LTD. This is group LTD through your employer, right?
Yeah.
Most of them will, aren't going to, after the fact, come back, circle back around, and try to eliminate it.
Well, I can see what my vision's doing, like on a weekly basis. So I mean, I don't think it's going to be an issue. But you know, as they say, forewarned is forearmed. So you know, I just want to make sure.
That's what this presentation is all about.
Oh yeah.
And Alan, you know, if they do that, you know, I don't need to tell you that step number 1 is hire yourself a lawyer.
Oh yeah. Right. And I would also urge. I was turned down initially by the SSA as well, and I'll just tell anybody that's having the problem, when you go, they're probably going to send you to their own doctor. Do not guess at the eye chart. Do not guess at the eye chart, because if they can say that you're seeing 2100, they'll do it. If they did not give me what I call a real eye exam, and it just caused a lot of difficulty. I had to hire an attorney and go through all that, but you know,
right.
It all ended well. But still,
but it was it was a lot of hassle, and it was scary.
Exactly right. It's just the discomfort of having to deal with it, and it's bad enough to lose your vision, but you know, you have that heaped on top of it. It's just
well, as I said to you folks earlier, what you need to do is schedule that initial fact finding there personally, and go with your ducks in a row. I mean, what I did is I already had a form filled out by my retinologist that used the magic words legally blind, so that the examiner didn't send me to their doctor, because I also feared exactly what Alan's experience was. Alan, thanks for asking.
Yeah, sure. Thanks. That was an excellent presentation. Thank you.
Thank you.
Pat, I'd like to thank you for presenting today. I'd like to thank you all for coming. Thanks. And that wraps up today's webinar.